Hot fun in the summertime. That's what it is with the FASB and the AICPA. This is IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing with Sobel & Company. These episodes qualify for NanoCPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer, these views and statements expressed herein are my own and not necessarily those of NJCPA or Sobel & Company. Okay, so we came off a very active session previously with Frank Boudelet joining me. If you didn't see it, go back and watch that previous episode and get those NanoCPE credits. It was filmed at the convention, so it was a lot of fun. I look forward to doing more episodes with Frank too. But now for this session, we do have a lot of activity that went on. It seems you think it was the summer, people are on vacation. Look at me, I'm ready for more golf. Nope. FASB, AICPA came out with some good stuff. FASB issued ASU, Accounting Standard Update 2022-03, which is the fair value measurement of equity securities subject to contractual sale restrictions. Now, I talked about this concept a while ago, not that I was ahead of my time or anything. The FASB had put something out about it, so we had talked about it. You can go back in previous episodes and see. But they finally came out with an ASU specifically talking about fair value of equity securities with contractual restrictions. And you can go look at what all type of contractual restrictions there are. I only have 10 minutes to talk about a lot of various topics. But in this, they said, how do you account for fair value when there's contractual restrictions? And they said, they put out this pronouncement to clarify that contractual restriction of a sale of equity security is not considered part of the unit of account of equity security and therefore is not considered measuring fair value. All of that to say it doesn't really matter as it relates to the fair value. But as you know, what's coming out with a lot with accounting, there are some enhanced disclosures that have come out, which is good. It gives the reader more information. Remember, years ago, people wanted to go to IFRS, and they didn't realize what IFRS required was a lot more disclosure, and that's kind of where the FASB is going. That's the whole convergence of things. So the new disclosure requirements, getting me back on track, is the fair value of the equity security subject to the contractual sale restrictions, the nature and remaining of duration of the sale restrictions, and the circumstances that was cause lapsed. Now, if you notice these types of disclosures that are coming up, it's kind of similar to the revenue recognition, the leases. It's a lot of qualitative disclosures. As I said, the previous one, the nature and remaining duration too. With the leases, you have to give weighted average of remaining lease term, the weighted average of the discount rate used. They're putting a lot of this information in, and for those that have to prepare financial statements, not just in public, but also those in business, it's going to take a lot of gathering of information to properly disclose all of this. It's effective for public business entities for fiscal years beginning after December 15, 2023, and for all others for fiscal years beginning after December 15, 2024. So we do have a little bit of time, but never fall asleep, because remember, we have leases that are effective now, and next year we have CECL, current expected credit losses, that's going to be effective, and then this one's going to come out, and you know they're going to come out with some others too. Okay, there was a good FASB report that was issued. It was called the 2021 Agenda Consultation Report. You can Google it, you can get a copy of it. They just put out some good information as to projects that they added to their technical agenda, including accounting for and disclosures of digital assets. That's a hot topic. We had a CPE in our office on it. We're still very confused about a lot of items. Fortunately, none of our clients have digital assets yet, but I could smell that it's coming, especially in the nonprofit area. Somebody contributes digital assets. Don't know. Anyway, so finally the FASB is starting to focus on it. Accounting for environmental credit programs, accounting for and disclosure for software costs, which is good. Then they added some projects to the research agenda. Accounting for exchange-traded commodities, accounting for financial instruments with ESG features. I don't know if I can go a session without saying ESG. I have to. I've got to find it somewhere and report on it. Hedge accounting phase 2, accounting for governmental grants, Consolidation for business entities, a couple more. Now they're getting into some other areas which I found very interesting. Financial Key Performance Indicators, KPIs for business entities. FASB starting to look into all these different measurements and how they could or should be reported on, including expanding the income statement, a lot of stuff they're working on, and finally statement of cash flows. Okay, that's the FASB. I'm halfway through the session. Now I got the AICPA. So the AICPA has updated its accounting and auditing for digital assets. They updated it as of June 30th, 2022. So if you're not a member of the AICPA, try to become a member, and then you can get your hands on a copy of this and a lot of other information that they have available. I'm not pushing for AICPA membership, but there's a lot of good information. And you've heard me mention in the past the Center for Plain English. That's a section of the AICPA we found extremely helpful for the small and medium-sized firms. A lot of great information there, even though I may not agree with them at sometimes. Remember, these statements are mine and not New Jersey Society of CPAs. Included in this updated guide is a Q&A to address the SEC Staff Accounting Bulletin, SAB 121, and it addresses accounting for obligations to safeguard crypto assets that an entity holds for its platform users. In summary, there's a Q&A that helps talk about crypto assets. Now, it may not apply to you because you heard about the definition of it, but it is a good area for you to look into and read up and get some more information on. Okay, AICPA came out with SAS 147, Statement on Auditing Standards 147. Remember, 146 came out a little while ago, and that kind of tied in with the quality management standards. So 147 is out now, and it's inquiries of the predecessor auditors regarding fraud and non-compliance with laws and regulations, or what the AICPA likes to refer to a lot is NOCLAR. Okay? Always remember that. NOCLAR is non-conformance with laws and regulations. What I liked about this one was they kind of say it passively, but it's a little bit more forceful. It authorizes the predecessor to respond to the successor regarding inquiries of NOCLAR. Okay, so it kind of puts a little bit more on the onus to the predecessor to say, hey, respond to the successor about various items, including fraud and nonconformance with laws and regulations. I like this because we're taking over an audit right now, and the predecessor won't talk to us for a variety of reasons. And when you look for professional courtesy, which most of the firms do in the area and even outside the state, this is kind of putting a little bit more of the onus on the predecessor to say, hey, cooperate with the successor. We're trying to make a smooth transition. You can talk about all other things about payment of fees and everything. That's a separate session. Okay. Document the inquiries, and it's effective for audits. Now, this is one of the few times I see this when it relates to auditing standards. It's effective for audits of financial statements for periods beginning on or after June 30th, 2023. Now, just keep focus on that, not here, but in the future, because the FASB always says for financial statements for periods ending after. This is one of the few times they say for periods beginning on or after, but it's usually periods ending after. In line with that, the PEAC, the Professional Ethics Executive Committee, put out new requirements for CPAs regarding NOCLAR. And they even say in their summary of the guidance that came out that this is in connection with SAS 147. Now, if you don't view or participate in the PEAC meetings, I recommend it. There's a lot of great information. You can just listen in, especially now that we're in the remote world. You can really listen in and find out a lot of information about about the ethics area. Frank and I talk on the law and ethics, and it's just really great hearing what they say and see how it ties in. The new requirements affect those in public and those in business. And interestingly, there's a lot more requirements for those in business than there is in public, and I'll give you the list real quick. For those that are in public, obtain an understanding of the matter, and remember, this is regarding NOCLAR, nonconformance of laws and regulations. Advise a client to take appropriate and timely action to rectify and remediate, and document all the aspects. Okay, well, I've seen that, especially as it relates to fraud and illegal acts. Then as it relates to business, this list is going to be a little bit longer, so I apologize for reading. Obtain an understanding of the matter. Take appropriate steps to have the matter communicated to those charged with governance, to comply with applicable laws and regulations, have the consequences rectified, remediated, and mitigated, reduce the risk of recurrence, and deter the commission of the nonconformance of laws and regulations, and finally, evaluate the response of your supervisors. It also talks about those that are in business going and potentially reporting to the responsible agencies. So I recommend that you look into this, especially if you have to take your law and ethics and start thinking about this. We don't cover NOCLAR a lot, but just keep that in mind. So there are other areas that came up, but those are the big ones that I wanted to cover. And let's wrap this up. So in closing, I'd like to remind you about some upcoming NJCPA events. For those of you that are involved in governmental accounting and auditing, don't miss the annual Governmental A&A Conference on July 21st. And learn about the new risk assessment standards at a 4-hour webinar presented by Renee Rampula on July 27th. Register for these events and more at njcpa.org/events. And as always, be sure to join the NJCPA Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening.